Welcome to Stock Market Explained. The guy who predicted the 2008 housing crash just said SpaceX is overpriced by $3 trillion. And then the stock fell apart. Here's exactly what happened. SpaceX is Elon Musk's rocket company, the one sending astronauts to space and building Starlink internet. For years, regular people couldn't buy shares. Then finally, the doors opened to everyone. When SpaceX announced its IPO, that's when a company first sells shares to the public. The internet went absolutely wild. People were refreshing brokerage apps at midnight just to get in line. Demand was enormous, way bigger than the supply of shares available. Here's the thing. Imagine a lemonade stand opens at school and kids start paying $10 a cup, just because it's exciting and new. A few days later, everyone realizes it's still just lemonade. The price was never really worth $10. That's SpaceX's problem. On debut day, SpaceX shares surged. Regular investors piled in, fueled by FOMO, that's fear of missing out. But then, Michael Burry, the legend from The Big Short, publicly warned the stock had a $3 trillion valuation problem. Translation? Way too expensive for what the business is actually worth. Then everything hit at once. Institutional investors, the big money, refused to keep buying at those high prices. The Federal Reserve held interest rates steady, making expensive stocks harder to justify. A global tech sell-off spread worldwide, and SpaceX dropped 16.4%, wiping out most gains for everyday investors who'd bought near the top. Here's the thing. The guy who predicted the 2008 housing crash looked at SpaceX stock and said, "This has a $3 trillion valuation problem." And just like that, the most exciting IPO in years started falling apart. SpaceX stock dropped 16.4% from its peak. That's not a small dip. That wipes out most of what everyday investors had made. And Burry's warning? He said the stock was overpriced by roughly $3 trillion. That's more than most countries earn in an entire year. The Federal Reserve held interest rates at zero change, meaning no rate cuts. Why does that matter? High-growth stocks like SpaceX need cheap borrowing to justify sky-high prices. No rate cut means the expensive price tag gets even harder to defend. Ouch! Thousands of regular people bought SpaceX shares near the top, driven by excitement and fear of missing out. Not Wall Street pros, everyday investors. And they got hit hardest. Meanwhile, a global tech sell-off was already spreading from the US into Asia and Europe, making everything worse. Here's the lesson for your money. By the time you can buy a hot IPO, smart money has already set the price, usually too high. An exciting company is not the same as a good stock to buy right now. Always ask, what am I actually paying for, and is it worth it? Don't let hype make your investing decisions. When even the lemonade stand gets too expensive, the price always comes back down. Follow at Stock Market Explained for more.